This is your weekly strategy digest, your clear lens on what the market's waves are hinting before the noise catches up. This week, volatility stays on its steady bearish path while the dollar carves out what could be a serious defining bottom. Bond yields keep their bullish drumbeat alive while TLT lags behind, looking even more bearish than yields are bullish. The Baltic Dry Index surprised with a sudden spike to close the week on a high note. Over in currencies, both the yen and euro look primed for a sizable loss to the strengthening dollar. The financial sector may be pausing now, but its bullish roadmap remains solid. And technology, the odds still lean toward a continued rally if the waves keep behaving. Let's talk strategy. And we start with volatility. This is the closure of Volatility Index on the daily frame. What we are seeing here is fairly strong bearish candles on the daily frame that preceded the Friday's one. On Friday, there is an attempt to form a bottom. However, I would say that even though the Friday started very strongly on the bullish path, it gave up all the gains and ended with a red candle, with a red doji. Most likely it's going to be a neutral one, and this is just a fake spike. Something similar to what index formed on Monday. If we talk about the futures are slightly different, and generally this green candle is more bearish than bullish. Technically, it is a thrusting line, and even though we had a chance to see an attempt to reverse it to the to upward, most likely it is going to be bearish continuation. Speaking about the weekly candle, we have a fairly similar and bearish closure here. If we talk about this interesting curve here, so there's the 50 weeks moving average, so it was curled downward here, and it wasn't allowed to cross the 200 days moving average, which would be a strong bullish move. Instead, it looks like we are forming at least a consolidating bottom, and we might see a continued move down. On the futures, this is a bullish engulfing. However, we remember that it was a contract switch during the week, and this could be just a noise. In order to see a real shift, we need to see a very strong confirmation of such a move. If we look at the bigger frame, for example, like 15-day frame, which is closing on Thursday, this is a very interesting formation here, and this is MACD bearish cross right now, which is tentatively formed, and it could be confirmed on Thursday. If it happens, well, I would be looking for maybe a year of bearish movements, and something similar to what happened here was in 2023 and in late 2020 and early 2021. So this would be somewhat similar technical conditions. Well, let's see what happens next week. It would be very interesting. And speaking the last one, this is the classical pattern that we've been tracking since June 12th, when we said that there is a chance for a bearish flag. So far the volatility index futures moved down, and now they're playing around this bottom boundary. So if a break happens, well, then the targets will remain the same. However, from the Elliott wave perspective, this big gap complicates further analysis, and we might see quite a few surprises down the road. So far, everything looks bearish, predominantly bearish. Now let's talk about the other instruments, and we talk about dollar. So what I'm seeing here, candles are solid bullish on the short and mid-term frames. Dollar formed a bottom on the daily and 2-day frames, and next week we had a very strong chance to get a bottom on the bigger frames. It's a bullish engulfing on the weekly frame and the bullish piercing line on the 8-day frames, which closed on Friday. So this dollar is strongly bullish for the next week at least. And depending on the closure next Friday, we will talk about the next steps. Speaking about the short-term perspective, I still think there is a chance for a quick spike downward and forming another little bottom in order to start a wave, an impulsive wave. However, this wave could be transforming into a bigger impulse if we consider that the first wave is a leading diagonal. Well, again, the next week would be critically important for that. So if it happens, then we would be looking for dollar jumping towards 1-on-1 and higher. So these are short-term perspectives. If we look at the mid-term perspective, this is the bearish flag that we've been tracking for a while, since March, technically, and now dollar is firmly sitting in the target that we just discussed about 2 months ago. And now we are looking for a move higher. Whether we can see another little wave to form a stronger bottom, that's still a question, and we discussed it just in the previous chart. And speaking about the long-term chart, it remains the same for many years. This is the original chart on November 2020, and this one, the latest design of this chart, so it was in November 2023. Since then, it didn't practically change. So right now, what I'm seeing is that it is a big bear flag is forming here, and if we see a strong reversal here at the cross of the two lines, then we would be looking for wave 5. Well, that's all for dollar. Now let's talk about yen. Yen is losing to dollar strongly. Dollar is gaining strength here, and the daily frame and the weekly frame practically confirmed a bottom, and I would like to say that this most likely a double bottom for the dollar yen on the weekly frame. And the 10-day closure, which is coming on Tuesday, will likely confirm a reversal on even a bigger frame. The charts are practically the same, no changes here. This is the same chart that we started tracking in November 2023. So far, I think that wave 4, it still has a chance to form another wave down, but depends on how dollar gains strength. If it does accordingly to the dollar index path, then I would be looking for an immediate wave 5 to start here. So the wave is immature so far. Maybe in 1 or 2 weeks we would be able to get better data and project it at the micro level. That's the perspective for yen, and today I'm going to talk about euro. So euro is also bearish compared to dollar, which is gaining strength. This is the daily frame, and this is the weekly bullish engulfing. Now let's have an inverse ratio, euro to dollar. This is a clear bearish, clear top, and we have a strong weekly bearish engulfing for euro. This is the 3-month chart, so it's not defining now, but the next candle that we will be tracking is the 8 days frame. So far we are seeing a spinning top, but again we need to see a much stronger and much bigger confirmation for a potential reversal. However, this bearish engulfing on the weekly frame is a significant bearish event. Now let's talk about the perspectives. So if this bearish engulfing is followed by a very strong confirmation, and the euro dollar ratio breaks this line 112.757, this would practically invalidate a big impulsive wave, and I would be looking for a bearish flag here with the targets somewhere here. And this is not a fresh chart, this is just excerpt from the chart that I've been tracking for a long time. So this was the last time I updated this one on November 30th, 2024. So far, no changes here. Maybe I would need to shift this target a little to the right. So other than that, nothing changes here. Well, that's the perspective for euro. And now let's talk about the bond market and the yields. So far on the different maturity, if we look at the daily and weekly frames, it looks like the yields are forming a big bottom. For 30 and 20 years, the bottom is formed. We have a tower bottom formation. 10-year is catching up, and the 5 and 2 years are slightly behind, but this is quite normal. They will catch later. Now, if we look at the 10-day frame, 10-year yield, we can see potential forming here, 8x20 EMA bullish cross, and a strong break above the 200 days moving average. So the weekly frame, technically it confirmed a bottom here. So this candle is a confirmation for this bullish harami that we discussed last week. And if we see a break above the green line, well, that would be a serious continuation move. On the 15-day frame, which is closing in a couple of days on Thursday, there is a chance for a bullish engulfing. Let's see what happens next week. Looks like it's going to be crucial. This is the 20-year yield small short-term chart, and I think that there is a possibility that the wave 2 is complete as a WXY, and if it moves a little higher here, it would be a fairly clean impulsive wave. So it just needs a little move higher. Well, once it happens, we would be able to discuss the next targets for wave 2 and 3. Now let's talk about Canadian bonds and yields. So this is the chart that we've been tracking for a while, since June 2024, so practically for 13 months. So that's nothing changes here, and today this month's green candle, it looks like it's gaining weight, and well, it needs to keep the momentum for another 2 weeks. If nothing happens, then it would be a strong bullish continuation towards the higher prices. Now let's quickly look at the spread, 10-year minus 2-year. At the beginning, a few months ago, I was thinking that it was an ending diagonal. However, that spread was able to push it stronger, and right now, based on the candles and technicals, I think that we are looking for a very strong wave 3 toward this level. Well, if this happens, then we would be expecting a bigger impulse. So that's the perspective. And now let's talk about TLT. So just a quick glance at the TLT candles and their closure on Friday tells me that TLT is more bearish than yields are bullish. And this is this freshly made 8 by 20 MA bearish cross, a confirmation of reversal on the weekly frame, and a strong, I think that we have 10-day, yes, a 10-day closure with a strong bearish candle inside down, and the next one, 15-day, which will be closing on next Friday, is a good potential for a bearish closure. Now, if we look at the Elliott waves and the classical patterns, I think that this is the one that we started to look at the beginning of June, and it was an early warning and practically the same targets. So that TLT extended this flag, made it double, and ended it with an ending diagonal, which is already complete, and now is looking for another move down. So this is the 4-hour chart. We have a 3 black crowds. If we see a new lower low, this would be a clean impulse downward, and after a consolidation I would be looking for a continued move down. So these are the targets and they remain as is. So that's all for the bond and the TLT discussion. Now let's talk about the other instrument. So that Baltic Dry Index, very interesting closure on Friday. I think at the beginning of Friday it was here, and I thought, well, it might be just a continuation candle, but something happened. Something happened in the last hours of trade on Friday, and Baltic Dry Index BDI formed a very strong bullish engulfing candle on the weekly frame. Now we have good prospects for the bullish reversal candle here, or bullish continuation on the 10-day frame. And as we discussed on the monthly closure was not bearish and it was rather bullish neutral. Now we see a confirmation of that, and I would say that with the technical support we had better chances to see the Baltic Dry Index to move higher. And this is the Elliott wave for the index. At the few weeks ago we discussed the potential resemblance of these two patterns. Now we can remove it, and I think it's been close so far. This, I would consider this wave 1, 2, 3 and 4, so no changes here, and most likely this would be wave 1, 2. I was exploring some alternatives. This would be wave 3, 4, and potentially wave 5, somewhere there. If we see a break through this rectangle, I would be looking for a move which is similar to, which is of the size of the rectangle. So this would be the perspective. So far, the Baltic Dry Index, which is a leading indicator for the market itself, is bullish. Well, now let's talk about the other critical instruments. So this is the technology sector. Let's have a look what technology sector candles telling us. So just a few minutes before the closure, there was a chance for technology sector to confirm a reversal on the daily frame after a strong bearish engulfing on Thursday. It was a chance for a confirmation. However, it was pushed just a little up, a few basis points, and it didn't confirm a reversal. So the chances for a continued move higher are stronger right now. So this candle, the weekly candle, as a result, formed a doji. It could be a bearish harami cross. However, it could be just opposing doji like these two ones in the previous at the beginning of June. Well, until we see a strong confirmation, we would be able to say what it is. And another very good signal that we received on Friday, this is a closure of the 10-day frame, which is a normal classical bullish continuation candle. At this point, I cannot say that the 10-day frame is bearish. So we might see a pullback a little, but in general, the trend and the technical health is bullish. And speaking about the Elliott waves, this is the chart that we discussed early in June, or in the middle of June, a month ago, when XLK was about 240, 239, and after this move, after this call, we outlined the targets on June 25th, and right now we are seeing that the minimum target has been hit on Thursday, and now there is a possibility for a bigger wave 4 at this moment. However, we would like to see a confirmation. So far, after the call, technology made about 8% for those who watch this and follow this call. So far, I'm not seeing any changes here. So let's see what this stop, how this stop evolves. I'm not seeing a strong reversal confirmation yet. So the technology is generally bullish, however, slightly closer to neutral. We still need to see a strong move on the weekly frame. Now let's talk about the financial sector. Financial sector is technically bearish because we have a bearish confirmation on the daily frame, and we have a bearish inside down for on the weekly frame. So we might see, most likely we might see a little pullback here. So it still needs to be much stronger because the candles are still above all support lines, and the 10-day frame closure was practically bullish neutral. It could be a hammer, but given the technical perspective, I would say it's more bullish than bearish at this moment. Well, that's at least for now. The financial sector is neutral, so we might see some consolidation before the next leg higher. And speaking about the Elliott waves, so this is the chart that I made on July 10th, 2023. This chart has been unchanged for 2 years, and those who followed this call would have made 55% on the financial sector in 2 years. So far, I'm not seeing any signals which would alter this path. So that a long-term perspective for the financial sector remains bullish. Now let's move on. As of July 9th, our swing room stayed long on SPY. And since going long on June 16th, the S&P 500 has added 283 points. Over the past year, while the SPX returned about 13.4%, our swing setups delivered 33. This is for Tier 2 unleveraged, and about 31% for the basic room. That's the edge you get when you trade alongside master traders David and his time-tested algorithms. For exclusive entry discounts, reach out anytime at help@investingangle.com. And now let's wrap it up. So, where do we stand as the next wave sets up? Volatility continues to ease, lowering the fear floor for another push higher, but stay watchful for sharp spikes. The dollar series bottom could soon flip the script for major currencies. The yen and euro might find themselves on the losing end of that move. Bond yields keep flexing bullish trends, yet TLT's deepening weakness reminds us that not all signals align perfectly. A surprise jump in the Baltic Dry Index adds a healthy layer of optimism to the big picture. Meanwhile, the financial sector's pause looks more like a breather than a reversal, while tech's rally odds keep getting better. If you value catching the signals before the headlines catch up, share this with your trusted circles, hit like, and help spread the real wave counts. For daily setups, swing signals, and long term broadcast reviews, stay tuned at investingangles.com, where we chart the charts before the crowd even blinks. This is Investing Angles.